Hello and welcome to iTradeAIMS. This is Imi and welcome to the episode 54 of the London Report. Today, the 8th of March, we did some fantastic trades. We're going to review what happened today, how to trade the pullbacks. I'm also going to talk about a new technique that I call the dip method. It's very similar to what other people call it as well. And we are also going to look at last week's, have a quick review of the last week's trades as well. But today, the day started slow, but it ended with 295 points profit with 128 in one go. So stick around to see how we did that. So let's go. And please subscribe to the channel and hit that bell icon so you get a notification every time there's a new video. So I want to talk about the pullback method and how we trade it at the London Open or at any time using the DAX or trading the DAX. So what you see is a chart of the DAX30. This is when it opened. This is the pre-market open, Frankfurt Open. So without making the chart too cluttered with lines and all of that, we don't need to do that, but if you look at it, there was a good 42-point move up and it was going sideways. So the first thing I did after saying hello in the chat room was I said the daily trend is sideways. That was this. So we can see that it was sideways, and the overnight open shows a strong 160-point bearish move. Now that was interesting. This is the Monday open. It gapped quite high, but it filled the gap. The pre-market is bullish. Candle forming on H1, which was this one. This one was a bullish candle, and this is the London Open that started. So we're looking at this, and we were looking for a momentum breakout, right at the London Open. I had the range marked. So this is the range low, this is the open, that's the pre-market range. Obviously it makes sense that if it breaks here, we're going to go long. So I did go long. That's not that trade. There was, I think there was a couple more. This is the one that I went long, and I don't know why I got out. But it went up, I took some of the profits there, came down, break even. But as soon as the price goes on the other side of the open, I'm not interested anymore. But I'm looking at the levels to the left. So the chart looked very ugly, and that's the most important thing. So the reason for this video today is afternoon session, what happened and what Doug was saying, and I'm going to get to that. And it was about the pullback method, how to use it. Now, when price comes down, and I'm thinking, okay, so there is no volatility in this. There's no strong move. And if you allow me a few more minutes, I will show you what a strong move is, because we have seen it after that. So price comes down, hits those levels, right? Starts to go back up, comes to those levels, and reverses again. Really strongly moves down. Now, if you isolate price, and if you only look at the pattern only, you know, 2 candle pullback or 3 candle pullback and all of that, and you don't care about what's happening in the market overall, like, you know, what's all of this, then this was a very strong move for you. So some people might have gone short on this. Even I went short on this, but knowing that what I was talking about in the chat room at the time was that if these levels were to be broken, then this 3 candle pullback was most probably my quite early entry. So if the market was to continue going further down, I would have got myself in quite early. But I was ready, knowing that this is a sideways market, I could take some profit. So what I did was that I think I took half of it here, and then the rest of it break even. So wasn't a profitable day, and I thought that was the end of it. But, you know, always keep the mind open. I put alert level at there, and another alert level here. And I started doing my other stuff. Here I got an alert. I came to the screen. I got long, and I took a rent. I had a loss. Look at this. 1, 2, 3, 4. See, at the exact same level. It made a lot of sense. But most probably the market sees all of this or whatever. We went long, and they took us. So there we go. Price comes back to this level. What is this line? It's this line, right? It's the high of the pre-market range. Now it might be that, it might not be that, who knows? But it bounced around this area. You can see this. This is what I call the dip entry, and I will explain this a little bit later. It went up really beautifully and hit those levels and ended. And I thought this is probably now the end of this session as it is. But as it goes, you see, I mean, how can you ignore this? If you look at this candle, it is almost a bullish, actually we can call it a bullish pin bar. And it has bounced off what we call a very important level, which is the London Open. So making an entry on this would have been interesting, but what was happening to the left was not really giving me confidence. So didn't do it, and that's how it is. So price goes down, and then now at this moment, you don't want to trade unless this level is comprehensively broken. It wasn't comprehensively broken. It was broken gradually. It went up gradually, right, like this. And when you're back testing and look and doing stuff, you might count these as really nice winners. And that's really a huge mistake that people do in back testing. You can't really do that because you would only have got this having sat down at your M1 chart for about 2.5 hours. That's one. And you would only have got this if you were taking all of these entries. And why would you take all of these entries when it was in sideways market? So the question that it was the difficulty with understanding the pullback. And I think the only thing that's missing from Doug's perception is, so the thing to understand is that you want to identify a range. Even if you're day trading, you're looking at it, you know that this is now your range, whether you have the lines or not, whether you have the template or not. You need to have a mechanism to understand what momentum is. So there are 3 things that we do. So number 1 is identify the range, right? You have identified the range. Then number 2 is a volatility breakout. You need something like this to happen. And then if you're able to get an entry over here and here using the micro pullback, which really didn't happen in this case, the next thing will be to wait for a pullback. And there's an interesting thing that we did today. So if we mark this level here, you would notice that price went up, and I was in the chat room there because this alerted me, and I came down. And I did a different type of entry today, which I called the dip entry. And the reason I call it the dip is because price has dipped below the 2 lines, but it's still tradable because if you look at the M5 chart at this point, it had a 2 candle pullback. Now granted, this was a really strong move down. It actually bounced off 2 levels. One is the 10 EMA and the other one is these highs. So that was interesting for me, and which validated the entry. So if I show you the screenshot here, so what you can see is that I used the 2 techniques. It's a bit advanced. So if you are like a member of AIMS or if you're a new trader, you'll have to kind of wait for it. But the first entry was here. So I split my position into 5 and I started entering. So I already had in my mind that I'm going to have maximum 5 position. This is called the webbing technique, by the way. It's in the course inside. So I entered here, and every time it goes in 5 or 10 points in my favor, I would add on. I'd like to have them spread across evenly, but they don't have to be perfect about it. So once I got in here, then it went up, I got in a bit more, Then it went up and came down. When it started going back up, I did another add. And then as it started going, I did another add. And then there was another add here. And my target point is there. This was a webbing technique. You didn't have to do webbing for this. You could have just gone long here, knowing that this is your area that you would get out. So if you go to our chart, if you were to go long here, either at the end of this candle, now this going long on this candle would be a lot interesting because now you have a confirmation, right? So I didn't wait for the confirmation. I went in long here. So my risk was just 5 or 6 points. So obviously I went with a 10 stop loss over here. So I had a lot of space, even if it dipped a little bit further lower. Here's the term dip again. But in this case, it kind of perfectly aligned with this. And it's not always perfect like this, but in this case it is. And honestly, when you are trading it, even if it is a perfect setup now, at that time you would have so many doubts and all that. And that's the whole thing about trading. So made my entries. But if you were to wait, or if I were to wait, I could have made my entries above this because this would be a confirmation. As you can see, an outside candle. And I took all those entries and then I held on. So I keep holding on to my positions as long as price is gradually going up, not closing below the 10 EMA. And I want to see this peel off. So as soon as it peeled off from the 10 EMA, that means that there's more volatility now. And that's why the 10 EMA or the 9 EMA or 8 EMA, whatever you have in there, the green line of Gator. You see now, this is the dip trade, right? It goes inside. And as you can see with the boxes, it's very clear to see. So price comes back to the boxes and there's a confirmation candle. You go in long, and when you are holding the position, you know, you can see that price is going away from the green line. So now you can trail the candles. But we had our exit over there. Right, let's go to that. And I think I can drag and drop all of those entries. Can I? Yes. Drag and drop so you can see where I exited. And that this is not just a fabricated chart. I took those entries. 1, 2, 3, 4, 5. So basically it's a plus 18 here, a plus 23 there, plus 27 on this, plus 29 on this, and plus 32 on this. So yeah, okay. My recollection was slightly incorrect from earlier. So I made my first 3 entries right from here in the middle of this candle before it closed, and then I made another entry and another entry, and then I waited for this. So it was a little bit of drawdown, and then it started going back up. I've made another entry here, and then after the pullback, considering this as a 2-candle pullback, made another entry, and as it peeled away, it was going towards my target. I can see that the momentum was going, and I banked it. So this was 128 points trade. That I think I had that previous rent actually took me down to break even or slightly down, and this then took me back up, and the whole result was 3.5%, which was far more than enough for us. So this is not the classic pullback entry, but this is a different type of entry which we took. And the reason I'm talking about this is that the point is that we don't want to restrict ourselves to a really objective and really difficult, you know, like a narrow definition of a pullback setup. The pullback setup can be a 1 candle, a 2 candle, which is a 1 type of entry. Then you have a 3 to 5 candle, that's another type of entry. Then you have the 5 to 7 candle, that's another entry. And then you have the dip entry. So how many candles are this? 1, 2, 3, 4, 5, 6, 7, 8. So I cannot quantify that in that way, but reading the momentum is more important than, you know, getting the perfect pattern. So in here we have these 3 points where you have the number 1 point is that you want a range, and then the number 2 point is point number 2 is you want the volatility breakout, and point number 3 is you need some sort of pullback to make those entries. And sometimes we can actually time entries into this as well, and let me show you how we did that in New York Open. So if you look at it, price is going sideways, and up to here it's sideways, going up, breaks out. So here's another example. What would help with understanding the pullbacks is that you see these spikiness and all of that, and you know what time of the day it is. It's before the New York Open. Volatility is going to be low, even though it's kind of broken above this, but you can see it's not clearly moving strongly like this was. Not a nice clean move. This is randomness. So this is not where you would do a dip or an entry, and this is a range. You want this range to be broken, and when it's broken, it has not been broken with what we call a volatility breakout, a nice momentum breakout. This wasn't it. After a few minutes later, you had a couple of, two candle pullback that bounced nicely against 10 EMA, but you could have taken that. Then you have the dip entry here, but nothing really to look to the left towards to see what it bounced against. But if I take you to the M5 chart, you would still find it quite interesting, is that on the M5 chart, it's bounced against the 10 EMA. So it would make sense to have a 50 EMA line on the 1 minute chart, because you're thinking, oh, these bounces, but that will complicate things because it will bring more things into it. So just keep it simple. So then now we're coming to the New York Open. I wouldn't be, actually I was talking about this and I said there's another dip entry here, but I did not take it or won't take it because it was just 5 or 6 minutes before the New York Open. And as you can see, this is the New York Open, comes down. The New York Open itself created a dip entry, but I didn't take it because then it was against the New York Open price. So I waited for it. And as soon as price went to this level here, I went long. And the moment I went long, I knew that if it comes down like 10, 15 points down here, using the profits that I already had, I would get out if the breakout was to fail. And I know that New York Open can move really, really strongly, right? So I didn't want to miss on it. If I didn't enter there, then I would have found an entry here. And then I started adding on, same thing. And then after that, I kept, let's just look at this. So that's the picture that I posted when I exited the trade right there. And then later on, we are trading this. I think this video also will help people who want to know, like, what do we do and how do we trade together. So web is filled with juicy flies. That means I was creating a web here. That's 239 around here. See, an entry, 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 entry. And then I kept moving stop loss. So from stop loss at 16, that was here, then to 20, 25, then this and this, and I got out here. Now at that point I had quite a lot of profit, otherwise I would have taken again another entry to do that, but I was satiated and I missed that. So stop loss at 45, and I got out at 45, which is there, and there were 3 entries in there, plus 71, plus 50, and plus 46. So add that to the 128 from earlier. Let's count it. So you have 128 from the first one, and plus 71, plus 50, and plus 46. So that's about 295 points. 128 in New York Open and 167 in 128 in London during the London session. Was slightly delayed London session. It was kind of like 2 hours after, but 167 points in New York Open, and this is quite possible all the time. But you don't have to count the 50 and 46. You can count 71. 71 is more than enough. And if you don't want to count the webbing for this, I think we can take one entry, let's say 32 or 27. Even that is enough. And sometimes, so last week, the whole of the 5 days, the first 5 days of March, every day market opened and moved. So it was a very good week. If you look at this one, That was New York Open. Even New York Open moved. At London Open, the market moved. It wasn't really beautiful on, I think, on the 4th, but still, we got the entry right here, and then on a little pullback, and it goes up, and that's it. Levels were hit. Let me just remove those lines. Okay, so let's do a little review of last week's London session. So if you look at this, this was a setup one. You can go to the box settings, change this to 20,000 for a bit, so that we can have a box here. And the London Open had a beautiful setup for us right at the open. So we made an entry above those levels. The price moved straight away, hitting our 20 or 30 or 40 target up there, which then later on was, you know, followed by a few of the pullbacks. Making a pullback entry here after the third candle will be a little bit difficult, but I think some of us did it. If you didn't take this, then this was the setup 2 entry on the pullback, and that was a really beautiful entry on that. And that's it. It's done. So if you go to now the 2nd of March, I'm skipping the New York sessions in between. Here the London opened over here. Still kind of sideways. We waited for these levels to be cleared, and as soon as these was clear, you have a 2 candle pullback, and I got in here and took the trade. That's another way of doing this. If you were on the 12-second chart, you would have taken a setup on this. And then we have the 3rd of March. So this was the perfect 3 candle pullback, which Emma took as well. There was an opportunity to go long over here or above here, straight at the London Open, but we waited for it. And then a 3 candle pullback, and that was a 10 stop loss and 20 target point like this. This was one of the most beautiful one. Let's go to the other chart. 3rd of March, perfect for the 3 candle pullback. So if you look at this, you don't need any indicators for this. Just watch the price. So here's the 3 things again, right? Range. That's one condition. Another condition, it's at the open. So you're expecting a volatility breakout, and you have a range. So point number 1, range, and at the open, point number 2, there's a breakout, a volatility breakout. That's 2 done. 3rd, you need to wait for an entry with a pullback. That's your 3 candle pullback. You take your long above this, or go anywhere long over here. You know where the low of this swing low is. It's here, so have your stop loss below this. That's your 10 or 12 target point. Price starts to go, trail candles, get yourself 30 points and leave. That's it. You're done. You will have another complex entry over here if you want it, but if you grab yourself this entry, that's enough profit, really honestly. So that's how that went. And then midday, you can see things like this, and those can happen, and you can have your entries as well. But why complicate things when you can just show up at the London Open and price moves? And can you see this, how the market is, you know, hitting that red line? What is this red line? This red line is the New York Open. So you see, price goes up, hits those levels, comes down, comes back to it, around those levels, goes down. Later on, it kind of lingers around that level. This is not just a random support resistance line. It is an important line. The New York Open, that's where the market opened. So that's why we have these lines, and that's what it is. So now coming back to summarize that question, was this story that I told was because of this, to explain that, you know, we take pullbacks as a method of entering into trends, into strong moving markets. We are not using pullbacks pattern only. We're not searching for, you know, we're looking at the market just waiting for the, you know, creating the pullback pattern. If that was the case, then we could just create an EA, you know, expert advisor, which would just look for a pullback and take entries, and it will end up taking all of these entries. And this is not where you want to trade. You want to use the human ability to actually decipher this information, that this is not the place to trade. You want to see clean, clear moving markets like this. And here's the final point that I want to point out is, so my friend went long over here. but there is no edge in going long in this, because when market did this and then pulled back and then went up and then it came down, it had two fake outs here. One is this. So as soon as this happened, I wasn't interested in taking this breakout because of this. I would then want price to break above that level. So let's put a line there just for the sake of it. Now that's my level. Price comes down, fakes out again, and is still below this. I'm not interested to do anything. Then price starts to come here. Now I have two levels to check. I wasn't even looking at it, to be honest, because I had all of this. But since Doug went long here, I'm explaining it now. So it goes here, price then tries to break that level but fails. And when that happens, then even this level doesn't matter to me now. Now this level matters to me. That's for the reason of, for the pullback method. And this is where I almost took a trade, and I should have, but I didn't. So if you look at it, then that is my, and then now bring that 3-point again. You want the range. So there we go, it's here. You want the breakout. It's there, right? Or you have the waltz pattern. The waltz is a 3-candle pattern. You have two or one trend candles, which breaks. Now what it didn't do is that it did not close outside the box and then create this, but it was still good enough. Creates a seed afterwards, giving you a very tight stop loss. If you make your entry here, your stop loss will be here. So the price starts to go up, and then you have your 2 or 3 candle pullback. I did not really like this signal. I did not like that either, but I was wrong. I should have taken it. This would have given me another 70 points, or this 3 candle pullback with a 15 stop loss would have hit a 30 target point very easily. So you don't want to take entries here or here. You want to take entries, when it clears these levels and then pulls back. That is the entry. This is the entry. This is the entry. Even this is the entry. Now this would be late. This would be a deeper pullback, but still it would be a good entry. You'd be looking to, for price to go around that level and hit your target. And that was also a very good trade. So there you go. I hope you enjoyed this video and learned something. This is a very, very powerful method that I'm giving away for free to everyone on this. And just, but the thing is, it is a pullback method. It is very difficult to master. It looks very simple, but it's not. And that is why we train people to take setup ones, which kind of, like the entries like this, but what it does is that it gives you structure. The setup one would give you a structure. These few indicators that you use, so this would be a setup one entry, right? What you do is that if you want to learn the pullback method, you want to start taking trades like these, and then, so this is the M1 chart, and if I go to the M5 chart, you would see that you have the pullback kind of mechanism. That wasn't a very good example. If you look at this one, so that's a nice pullback. If I put a line there and go to the M1 chart, there will be a setup one underneath it. You can see this. This is just randomly I picked it. So you have a 3 up, 4 down. This gives you structure. There's a flow chart to it. And if you take like 100 or 200 setup ones, and every time you take the setup one and you look at the M5 chart, you would identify that the perfect pullbacks are basically price moving like so and then pulling back towards the green line. Not things like these, with spiky candles and stuff. You want these levels to be broken, and then you want to take the setups. So that is what it is. And then, when the market is done all the way, all of this, it's a bit too stretched, so you don't want to touch these. Well, you can still trade them. It's still trading all the way there is actually better than trading inside this. You see, trading inside this is a total different thing, which shouldn't actually be done. We want to take advantage of price moving up, pulling back like so, and then taking trades. And then these ranges are to be broken. When they're broken and then they pull back, then you can take an entry there. When they pull back like this, you take an entry there. So there we go. If you like the video, please hit the like button and hit the subscribe button and the bell button so that you get a notification every time there's a new video. And if you have any ideas for other videos, do let me know. See you in the next one.